It is time for Talking Numbers. We're looking at large cap stocks today because small cap stocks have had a good run outperforming their large cap brethren going back to February of 2008. Now, this rally is 38 months old, halfway through what is typically the average cycle for small cap stocks. But if you take out a 2-year break, the small cap rally is actually running at 124 months, way past its average length. And my next guest says this means that the small cap cycle is running way too long and that the pendulum may be set to swing toward large cap stocks. Joining us with the technicals on the large cap right now, Pankaj Patel, the managing director and global head of quantitative research at Credit Suisse. Welcome back. Good to see you again.
Thank you, Bill.
So you think it's time to be giving the large caps a look relative to the small caps. Is that the idea?
Yeah, that's the idea. As you described, that even in longer term, since 1926, small cap has outperformed large cap by 146 basis points. But during that time period of 85 years, there have been long stretches of cycles of 10 years or more where large cap has outperformed and small cap has outperformed. And more recently, small cap has been outperforming for almost 10 years if you take out that small, 18-month gap.
Right.
So we think that it's time for the large cap.
And within that large cap space, you've created your own versions of stocks that are already beating their benchmarks. You got one for U.S. and one for international, right?
Yes. So what we did was, keeping this in mind that large cap are going to outperform, we create a U.S. Nifty 50 and global Nifty 50 stocks. And basically, these stocks, we pick this stock from the S&P 500 for the U.S. and for the global, we use MSCI All Country World Index. We pick stock which have higher expected growth in terms of earnings. Also, these companies have grown in earnings, sales, and cash flow more than average for their peers. And we look at the profitability of these companies. They've been increasing their profitability in last 2 to 3 years. And they are in top 1/3 in terms of size when you use market cap, assets, and sales.
So which sectors stand out to you in both categories here?
In both categories, like first for the global, in global materials, technology, and financial sectors stand out. In the U.S., consumer discretionary and technology stands out.
So to sum up very quickly, what's the bottom line here? What's our takeaway for individual investors?
For individual investors and for your viewers, what they should do is they should try to position their portfolio toward larger cap companies. And also they should look for companies which are growing pretty good in terms of sales, earnings, and cash flow, and increasing their profitability.
Very good. Pankaj Patel, good to see you again. Thanks for joining us.
Thank you, Bill.